I went on PitchBook, tried to find the 30 most influential, well-known, well-regarded VCs in the US, and I cold emailed all of them. Unfortunately, I only got one response. Fortunately, she was fantastic.
Okay, hey Damian, and hello to everyone who's joined us on the first ever episode of the Fun Side podcast. Thank you all for joining us. Damian, what are you up to today?
Firstly, Shruti, thanks for getting me on board as a guest. I remember when we talked about this, I don't know, was it 6 or 8 months ago? I was quite excited, and now even more so to see this in reality. What am I up to? Well, I'm up to shooting an exciting first episode of this podcast, besides trying to enjoy a little bit of my weekend in sunny and extremely hot and humid Dubai.
Right, so a little bit about Damian first before we get into the podcast. Damian was the chief of staff of the ESA PEVC club up until his graduation this year, 2025 batch. Damien is right now working as a consultant at Oliver Wyman in Dubai. And he's also joined a firm started by ESA alumni called XAura and has like a deep passion for PEVC and also getting ESA students and alumni into the world of VC. So, Damien, my first question to you is we discussed this podcast 6 to 8 months ago. What made you say yes and join in as our first guest?
Yeah. I mean, there are a dime a dozen podcasts these days. I think everyone and their mother has one at this point. But I think why this was exciting and why this was something I was keen to start up was there aren't, at least in my opinion, podcasts that demystify what the journey is into venture capital from people who either never thought about a career in that space or were never positioned in their personal or professional journeys to be able to do so. So I was really keen to look at it from this angle, but also spotlight people who aren't your traditional high end posting on LinkedIn very often and being thought leaders type of people in the VC industry. I was keen to get on people that wouldn't normally come across through LinkedIn searches or through media, but people who are still doing very actual real things in the space and doing it either a bit differently or having joined it unconventionally.
Okay, nice. So it's interesting how you say people who don't get spotlighted on LinkedIn or like are like visibly out there thought leaders because I myself felt the curiosity and interest to join VC and like pivot my career there. But I always thought that if I'm not out there on LinkedIn or if I'm not visibly in VC and talking about it all the time and understanding everything that has to do with the world of finance, then it's like really hard or near impossible to break into. And it was interesting to join the PEVC club as a first year director to know that that's not true. So I think for me, this podcast similarly is a way to, number one, showcase those people who aren't usually very out there, but are very much doing the work, but also to expose this side of VC that people with the interest and the inclination can always find a way to join the space.
No, 100%, Shruti. And in the interest of spilling the beans, let's already sort of get started. And I'll tell you a dirty little secret about the VC industry. For the most part, the people who are the loudest in the space or at an event or anything, they're usually the biggest scam artists, right? So case in point, I was at this innovation startup event in St. Gallen in Switzerland. Big event, well-known Start Summit, was actually a fantastic event. I was just sitting in the coffee area, and all of a sudden, I could hear this loud, obnoxious American accent with loud, obnoxious statements. Oh, I know this guy. I helped him raise his first $500 million round. I made that connection, et cetera, et cetera. So I thought, okay, interesting. Let me look this guy up. We're in the digital age. Everyone more or less can be found. So I thought, let me look this guy up and see who is he. Would he be someone worthwhile speaking to, someone who might have an interesting background? So I Googled him, and initially I couldn't find him, but I have a little bit of a sales background, so I dug in a little bit deeper online, and eventually I was able to find out that this gentleman did more than 10 years in Rikers Island in New York for financial fraud. Right. So putting two and two together, it just gave me an opportunity to think, okay, this guy has basically fled the US, is now in Europe and trying to find new people to scam. Right. So Yeah, just to go full circle, generally 90% of the people who are super loud aren't the ones that you ideally want to listen to or follow their journeys. But
Or
that's just my
are super
opinion.
suspicious.
100%.
Cool. So tell us a little bit about the PVC conference that we hosted at ESA this year with you and your journey leading up to the conference, why you felt the need to take the lead on conference, ESA PVC Club, and what you got out of it.
Definitely. So I was fortunate enough to be part of two of the conference teams. So as a first year, I helped out the club leadership at that time to run the event. And that's pretty much around the time that I fell in love with the idea behind ESA's PVC conference. Because there are a dime a dozen again of innovation, investing, venture related conferences in Europe, right? And some of them are absolutely top class. But generally, when you think about a student-run event or student-run conference, you give them the benefit of the doubt that it will not be very professionally run, will not have a lot of high caliber people come in. It won't really be well curated. But that was not the case with our PVC conference, right? The ambition from day one was to get in some heavy hitters, was to make sure that we're able to capture diversity in thought, diversity in our participants, not for the sake of DEI, but for the sake of bringing different perspectives on stage. And it wasn't just to give students an opportunity to learn about the venture industry, right? It was more about the community itself, the startup community, the investing community. It was about the people. And that's what pushed us to have a very professional, very well run event. And I was fortunate enough to actually moderate one of the panels. It was the panel on investing in emerging markets. And not to brag, but I was moderating a panel where there were decision makers in total having assets under management around $2 billion, right? So that was a pretty cool opportunity for me. But not only that, it was a great chance for me to be able to pull out some interesting thoughts, interesting ideas, and interesting perspectives from the three people that I was moderating the panel with. So it was a fantastic event, and that made me want to make sure that we have an even better one here in 2025. And we did that. And that started from pretty much July around this time last year, where I went on PitchBook, tried to find the 30 most influential, well known, well regarded VCs in the US, and I cold emailed all of them, right? Unfortunately, I only got one response. Fortunately, she was fantastic. We got Jillian Manis from Structure Capital, coming all the way from San Francisco. And I think our attendees had a fantastic time. She ran a great workshop for startups who are looking to fundraise. She was part of a fireside chat with one of our professors, where she gave some really candid, really amazing stories and insights into her journey into venture investing. And I was super proud to be able to do that and also, encourage the next generation of our club leaders to run an even better event than we had. So that's sort of the long journey into my relationship with our ESA PVC conference.
And just one more add to that point on Jillian. I was part of this conference team that ran this year's conference, right?
You were indeed.
We were we were wondering why the audience has dropped within Ola Magna. And turns out upstairs in the coffee area, Jillian was running like her own informal fireside chat where like the entire audience that was supposed to be in the panel had gathered around her just to listen to her thoughts and views and opinions. It was an unintentional, unintended fireside chat in the coffee area and really speaks to the kind of people that come and attend our conference. And I'm really excited to like take that over and run it forward next year and also to invite you as, of course.
For sure. Yeah. I mean, as an event manager, I saw that as well and was a bit annoyed. But the person in me as well was overjoyed that she did have this sort of impact and pull for our audience. Just a little bit, another of a backstory. Why Jillian was on my list of people that I initially contacted was because I heard her on a podcast more than 7 years ago, where she was on this podcast called The Pitch, where people would come, startups and entrepreneurs, and pitch Shark Tank style to a panel of venture capitalists and this was based in New York back in the day. She was one of the judges, and for me, she was the standout judge. She was the one who brought a humanistic side to the questions, concerns, or challenges that she put forth with the entrepreneurs who are looking to raise. And that really stuck with me. So for me to be able to, years later, be able to invite her as a guest, see her in person, and, create a connection between our students and our conference attendees with someone like her. I mean, it's unreal, right? Like it's a story that's going to stick with me that I'm, proud to share. And, I'm glad I was able to make sort of my dream come true in a way, from my mid 20s to be able to engage with such people and build a connection and a network with them.
Yeah, and one more thing I wanted to ask, apart from the conference, but still very much PEVC Club, last year and continuing on this year, we have this concept called the PEVC dinners. Can you tell us why that started
Mhm.
and what it's all about and what future students should hope to get out of it?
Yeah. So the dinners are supported by our fantastic professors who want to really instill in us as ESA students to build relationships for the idea and perspective of being able to learn from people who further on in their careers, and to be able to connect us with people who could, you never know, somewhere down the line, who could be our mentors, be our investors, potentially even be our business partners. So these are professionals that our professors have connections with, who come to the university and to our school to do some guest lectures and guest conversations. And the professors basically give our club an opportunity to connect these people through an intimate setting at a dinner at one of the students' house with our members. So that's the essence of what the dinners are about. And for me, it's fantastic. We try to keep a small group of, 5 to 7 people, trying to link them and their profiles and their backgrounds with the guests that come. And these people are wide ranging. We have consultant partners who work in private equity practices. We have startup entrepreneurs who have raised Series B rounds of more than 50 million. And we have a lot of VCs who come from all over Europe and even some from different parts of Africa and Asia, right? So it's an amazing chance to, be able to get them in an intimate setting and learn about their overall experience, right? Not just bombard them questions about how did you get this job? Can you refer me? No, that's not what it's about. I think it's about building a genuine connection, having some wine with them and some moderately good food. I myself was a host and I ruined the pasta when I cooked. We managed to save it and salvage it somehow. But it's just a chance to, not put on sort of the traditional networking hat and make a connection. I've
And
I've gone to a few dinners. I've hosted a few, and ultimately, I think it's a fantastic opportunity for any student who wants to get interested into it.
and how did the concept of dinners come up? Did it already exist when you joined ESA in the club, or is it something you created?
No, it was there from before, so it was again another legacy item that I was, proud to uphold and also grow even further. I think this time around we did a lot more dinners compared to the previous term, and that was important for me and our team because we got a lot of value from the dinners that we attended. So this time, as many and as possibly all the guest lectures that were coming to talk about anything related to entrepreneurial finance, we told the professors we're raising our hand, we'll give them a fantastic experience, just connect us with them.
And that really speaks to how connected ESA is and like how alumni and professors are always willing to like open up that channel beyond just coming and giving a talk in a classroom or like part of a course. And that's really like talks to the strength of ESA. Now, you mentioned something, you mentioned Shark Tank, and then you also mentioned taking off your traditional networking hat and getting into an intimate dinner. So before I even joined the PVC club at ESA, my whole view on VC was people in suits writing checks, sitting on like a table or something like Shark Tank. So let's go into this myth busting section that I have planned for you. I'm going to give you one myth, and you tell me is it myth or reality? And if it's false, tell
Yeah.
us what the real deal is. Okay. Number one, you need to be a finance wizard or an ex-banker to work in VC.
No, that is a complete myth. So Venture capital is wide ranging. You have early stage investing and you have later stage investing. And if I can simplify what that means is early stage are your pre-seed, seed, Series A rounds, right? These are where traditionally the checks are not super large. At the same time, either the idea or the startup itself is in a very nascent stage, right? And then you have later stage growth focused VC funds that are writing your Series B, Series C, Series D plus checks, right? And then this is when you're going into the 50 million plus sort of range where a company is well established, has a very sort of clear go-to-market strategy, is very stable in its annual recurring revenue, but also tremendously growing, and has a very sort of clear path towards what its exit for its investors would be, rather be it through an acquisition, an IPO, or potentially through a merger with another entity, right? Or even becoming sort of the next global unicorn and dominating whatever market they're playing in, right? So yes, for that side, it's a lot more analytical in the financial matters, right? Like you do need a background in to be able to do modeling, to look at DCF analysis, to be able to predict what the valuation of the company would be. And that is also sort of important to understand how much you need to invest and what percentage of ownership are you going to get, right? But now shifting to the earlier stages side, no, you don't need a background in finance because there's not much finance to begin with, right? It's a lot of assumptions, it's a lot of guesswork, and it's a lot of hoping, looking into a crystal ball type finance. But what's important here is, can you analyze the team? Can you analyze the market opportunity? Can you analyze the fit between what your venture fund is able to offer in terms of its network, its expertise to this individual or founding team in whatever arena that they're playing in, right? And so for this side, no, you don't need a finance background.
So you don't need to be a finance wizard to get into this world. Do you feel
You do
like
not.
ESA courses or the finance courses in the MBA kind of set you up well enough for that?
That's a good question, and it's a mixed bag if I'm being honest, right? I think there are some financial related courses like entrepreneurial finance that I think is a must, regardless of how much of a finance background you're in, because here it's more about the terminologies, right? You need to know what a term sheet is. You need to know and understand what pre-money and post-money valuation is. So these type of courses give you this baseline which you don't really need to have a finance focused mind to be able to understand, but are important in order to work in this space, right? So that coupled with courses such as VCIC, VCPE, I think this sets you up for a lot of educational success if you want to be in this field. And I think these are sometimes more than enough.
Statement number two, true or false? VC is a closed club. If you don't have the network, you're directly out.
This is true
Hmm.
to an extent. It's not a Nepo baby club. It's not a closed door club. It is a club, though. And there are barriers to entry, right? So it's not completely a myth, and it, at the same time, is not completely true, right? So just as a very big example, I did not have a background in startups or VCs. Yes, I come from consulting, but before I got my internship, it was not like I was heavy into the world of investing and had a lot of contacts. I was able to get my internship because an alumni who was working in the fund was able to introduce me with the general partner there. And I was able to basically speak my way into the role, if you will, right? I did have a background in working with startups a little bit, in a professional capacity. I was always interested in what's going on in this space, but it was more about sort of my skill set to be able to support what the VC needed at that time, which was focused on fundraising, and at the same time be able to again speak the language on certain terminologies. But yes, I think if I did not have someone who was connected to me in a certain way, it would be difficult for me to even find this opportunity, let alone apply for it. So it is very important to have a network, to build it, to maintain it in venture capital, because it's also a very, very small network, right? Particularly in a space like Europe. You will meet people in Paris for an event. You might catch up with them for coffee in London and end up doing a deal that's based out of Madrid, right? I think that's kind of cool. That's kind of interesting, but it's also something that you need to focus on if you want to, one, break into it, and two, maintain a strong career in the space of venture.
Okay. So not a myth then.
Not a myth, not a full-on myth, right?
You spoke about language and doing deals in Europe and different countries. Is English alone enough to get into venture capital in Europe?
Yes, because the world is getting more globalized. You do have challenges in certain areas where, as in Germany, in France, and parts of Spain, that yes, it's more dominated by the people who speak the local language. But again, because now venture capital and is inherently something focused on a regional or global scale, right? Like you don't want to invest in a company that's just going to focus on one city or one country, unless that startup is focused in India or China, right? You will always want a startup that has global ambitions. And if you want to be able to support a startup that has global ambitions, you as a firm need to be also globally aligned, right? So yes, majority of the English speaking roles are concentrated in London, which is still a very big hub in the European area. I'm not saying European Union, being careful with that. I am saying European area. But you can still break into roles in Barcelona, in Madrid, in Munich, in Amsterdam, and potentially even in Eastern Europe, right? They're also looking for great talent and they're open to English speakers. So it's not a barrier. So I would say it is not a limiting factor. It might be a little bit of a challenge depending on the firm that you're applying to, but I don't think that is something that's going to prevent you from being able to get a job in VC in Europe.
Okay, that's nice to know because I can't speak any other language that's relevant to Europe. So, Damien, I've asked you a lot of stupid questions in my first term because I felt that I could. But a lot of people are afraid to ask the dumb questions. So, we're going to kind of get into that now. Question one, before we talk about VC, what is venture capital?
So venture capital is funds, firms, individuals at times investing in very risky private asset classes. And these asset classes are startups, companies, organizations that don't have a track record, essentially, looking to build up their business and try to dominate a particular industry or field.
So then if I'm a business and I need money to run my business, why don't I go to
Yeah.
a bank first? And why do I have to go to VC?
Yeah, for the same reason as to when you were a high school student, you wouldn't get a mortgage from a bank, right? Because you have no track record. You have no trust in the market. You have no assets or money to back up as collateral. So venture capital is what makes it exciting, what makes it dangerous, and what also makes it lucrative is you're taking essentially a very, very risky bet, right? Have you heard of the power law, Shruti?
No.
Yeah. So the power law in venture capital is that out of the 20 companies that a fund invests in, right, at most you would have one or two of those funds that are going to return a large amount of whatever your in a fund is going to make, right? They are going to be the drivers of that 2, 3, 4x, right? Because majority of our companies are going to fail. A few of them are going to just be there, stable, but not really growing at a rapid pace. And yeah, one, two of those 20 are the ones that are going to make your returns. Right? So that's why VC is essentially a very, very risky industry to be in. And it's also a very risky asset class to invest in, but can be completely fantastically lucrative, right? But for every Facebook, Meta, Google that you have hundreds of companies that are laying dead in the graveyard.
Hmm. Okay, fine. So I get that as a high schooler with no track record, no government or no bank is gonna give me money, fine. But
Mhm.
there are VCs, there are companies that raise money even when they have profits. So if you have profits, you have a track record, then why do you still need VC funding?
That's a good question. And this is where the unique value add ideally comes of VC funds. A bank will be a very transactional relationship for the most part. a VC, especially when they have to get an opportunity to invest in a company that's the hot new thing, right? And in this regard, in the last few months, that has been gaining a lot of traction is Lovable in Europe, Stockholm-based, reached unicorn status extremely fast, doing 100 million ARR, it's amazing, right? So every VC fund and their mother wants to invest in Lovable at this point. What you need to do to differentiate yourself is what are the connections you can build for them? What kind of expert networks can you bring to the table, right? How can you unlock more value for the startup? So this is still something unique that startups can look into, and that's why they continue to build a relationship with VC funds up until the point that they're ready to exit or enter the public markets.
Okay, I get it now. Okay, VC money. Where does the money actually come from? Who's a VC? Who puts money into it?
So you have two type of partners when you're in a venture capital firm. You have your general partners and you have your limited partners. Your general partners are the ones who represent the firm, are the ones who are making the investment decision on a day-to-day basis, and are the ones who are working with the startups that are already in the portfolio and supporting them to grow. The money traditionally comes from your limited partners. So these are people who are high net worth individuals. They could be family offices, they could be pension funds, they could be insurance funds, they could be sovereign wealth funds, they could be even banks and companies that want to invest in this asset class. So your limited partners or LPs are the ones who pool in the money into a venture capital firm.
So the LPs pool in money from like super rich, wealthy people. Who makes the decision? If I'm Richard Branson and I have a lot of money and I give you my money and you're running my VC firm, can I invest in Lovable because I believe in the hype, or is that decision on you?
Yeah, so the decision, as I mentioned, comes from the general partners or the GPs, right? So they are the ones who, on a day-to-day basis, are making the decisions. As an LP, depending on how much money you've put in the fund, you can have certain amount of sway, right? So just as an example, I recently will become have become an LP in a fund, but the amount of money that I'm putting in compared to what some of the other LPs are putting in, I wouldn't be able to necessarily dictate what the fund does. I could suggest, I could bring it to the table, I could nudge at it, but that necessarily won't be, again, taken as seriously as someone who has more money in the fund would. But traditionally, it is your general partners who are making that decision.
So then decision-making power is proportional to the amount invested?
Again, this depends on a fund by fund basis, right? So
Okay.
if you're a Sequoia or an Axel Partners, there's only so much that you could be able to dictate, right? Because this is a big fund, has a reputation. The general partners are the ones who know what to do. If you're a smaller fund, depending on a relationship with your LPs, it could go any which way.
Okay. And how does the VC firm itself make money? Like, what is your profit as a VC firm?
Sure. Have you heard of the 2 and 20?
2 and 20.
Yes. So the 2 and 20 rule is what dominates not just VC, but to be honest, also other larger investment institutions. So there are two components to how a VC firm makes money. You have the management fee and you have the carry, right? The
Hmm.
management fee is traditionally around this 2%. So this is what, on an annual basis, is what will be taken out of the money invested to cover operational costs, right? So these are your analyst and principal salaries, the office expenses, travel, etc., right? Anything related to the operations of the VC fund, your tech stack, so on and so forth. Your carry, which is usually around your 20%, is what the VC will take from the returns that they get, right? So if you get a return of, let's say, $100 from one of my investments, Shruti, I will take $20 out of that, right? Only when it is realized. So that is how a VC makes money. The 2 and 20, the management fee and the carry. The percentages vary from firm to firm, but traditionally this is kind of the range that you're looking at.
Cool, clear. Next question. We keep saying PEVC, PEVC together, but private equity and venture capital are two different things. How different are they? And why isn't venture capital just part of private equity, for example?
They are quite different predominantly because of how they operate, right? When you are a VC, you are investing the money, right? You are supporting your founders on a day-to-day basis potentially, right? But usually it's on a week-to-week basis. Some do it on a monthly basis, depending on how many startups they have in their portfolio, right? But you're not essentially running the company. And you ultimately, what's important for you as a VC is to see this company grow because you want to be able to exit at a multiple of your valuation. And for to do that, they have to grow rapidly. In PE, there's a different mentality, right? Operationally, PEs generally look to incorporate people from their team into the management of these companies to overlook the day to day, to overlook the large strategy, and to take more actions and decisions while actively playing a part in how this company is operating. And, you know, I might be crucified by some people in the PE industry for saying this. Their focus is not necessarily about growth. Their focus is about maximizing the revenue versus expenses split. They want to grow revenue, yes, but they want to minimize expenses, right? So that's why PE generally don't have a really favorable impression. They're ruthless, and they have to be because they are trying to squeeze the margins out of a company as much as possible so that they can exit as quickly as possible.
But VCs aren't trying to squeeze, they just want to grow, and that's it. They don't look at how a company is operating on how much they're spending.
I'm sure they would love to. I'm sure some VCs would love to. But traditionally, because you also have stages of growth and VC
Mm.
investing in startup, you as an early stage investor might have a very small portion, right, when it gets to a later stage. So again, even if you wanted to make some recommendations or changes in the company, you might not have the shares enough to do that anymore, right? So the way the model is built, you will have other VC funds, you'll have other investors who also have a stake, and it will be difficult to necessarily coordinate that company going towards one direction, right? But yes, you do also have instances where a pool of VCs realize that the company has potential, but let's say the leadership does not, right? So there are cases where VC firms bunch together or as one large investor make the decision to get rid of the CEO or the founder. You know, case in point with what happened with Uber, right?
Mm.
Travis was the one who grew Uber into a beast, right? But ultimately, he was not the CEO who could take them into a journey of stabilizing and becoming a more professionally run institution. And this was where some of the larger investors had to make that call to get Travis out of his seat.
I wanted to understand that bit. So it's not like one startup gets funding from one VC. It's a bunch of VCs, and each of them have like a share, and then they some invest more, some invest less. How does that collaboration, or is it competition? How does that work?
It's a little bit of both, right? So when you're an early stage VC, you have also ultimately limited amount of funds, right? Like you cannot write the same checks that the big boys do, right? And again, I'm talking about your Sequoias, I'm talking about your Axel partners, I'm talking about your XAura Ventures. The checks that these firms can write are in your around the 9-digit sort of range, right? You as a small fund cannot write those checks. But at the same time, you have relationships with this fund because when your startup is doing well, looking to raise their next round and looking to get either 8-figure, 9-figure investment, this is when you tap them on your shoulders and tell your buddy who's at Sequoia saying, you know, hey, got this fantastic opportunity. I think you all should look into it, right? You'll get favorable valuation terms, right? I'll maybe even put up some of my equity so you can get a bigger chunk. Why don't you invest? So there it is it is can be quite collaborative in its nature, right? And again, this is also something as that's a big difference. You traditionally don't see hedge funds working together because they are all out for themselves, right? They eat what they own individually kill. But VC can almost be sort of hunting in packs if you think about it, right? It's a crude analogy, but it kind of works in this case. So that's also why the VC world is quite small because everyone knows each other, everyone's in touch with each other. Sometimes people even share deal flow, right? You know, hey, this deal came across my table. It doesn't fit my investment thesis. I think it fits yours. You know, why don't you have a look at it?
Hunting in packs was not what I thought when I was thinking about VC. I was more like, oh, friends find companies that they believe in and they invest, but that's another perspective.
Yeah, you're a B school student now, Shruti. You should know better than that.
Okay, this thing about investment thesis, there are
Mhm.
some companies that invest only in healthcare or maybe only in like agriculture. Does every VC have a thesis and how is that formed?
No, not necessarily. You have VCs that are sector agnostic. And again, this could be either in the early stage or this could also be in the late stage, right? I don't want to keep naming those big names, but those large VCs are generally, sector agnostic. You see them investing in everything from transportation to AI to med tech and everything in between, right? And so do some early stage funds also do that. Right? So it really depends on the general partners who are raising this a fund, running the VC, where they see better opportunity, and at the same time, what aligns with their backgrounds. You do have VCs that focus on a certain industry because they're run by people who have either worked in this industry for years on end, have deep expertise, or have deep networks in this area in order to be able to find the right opportunity, right? And this goes back to your point on, do you need to be a finance bro to break into VC? No, you don't. You have venture capital general partners who have PhDs in biochemical engineering, right? You have people who have been CMOs of companies that have listed and are now VCs, right? You have people who are professional athletes now who are running VCs focused on sports, gaming, and entertainment. So these kind of funds that generally focus on certain types of industries have people who are decision makers who have been aligned with those industries for a long period of time.
It's interesting you name or like mention people with like other industry expertise who've become VCs because I remember, I think Mr. Beast recently opened a VC fund, or that's one of the buzz in VC of Mr. Beast's fund. And second, do you know the Side Guys?
I have heard of the side guys. Yeah.
So they launched a VC fund a couple of months ago.
Oh God.
So,
I pity any startup that's taking money from them, but okay.
so they launched a fund a few months ago, and it's really interesting. Chain smokers, they have a VC fund as well.
Chainsmokers, Ashton Kutcher has one.
Yes,
Kevin Durant has a fund. So does Serena Williams.
exactly. So, do you feel like a VC firm is like a friendship between someone who's an expert and someone who has knowledge on how to make your money work for you? And then this expert tells them what businesses do well, and that's how they invest money.
What kind of friends do you have, Shruti? If that's what you think friendship is.
What? You're my friend. I think we could do something like this.
In terms of a relationship, it's a symbiotic relationship, right? Let's put it in that way. There are certain types of, let's say, advantages going with certain funds brings you compared to others, right? So in the case of, let's say, Kevin Durant, right? He has a fund in the US. If you as a startup are doing, let's say, well, have a great product, fantastic technology and innovation, amazing IP, why would you want Kevin Durant to invest in you, right? He's not necessarily, let's say, an academic. He's not a technological expert. He's a fantastic basketball player, right? And that's what his life is about. He might be a very astute businessman, but why would you want to invest with him compared to another fund? It's because of the exposure that he could give you, right? Attaching Kevin Durant's name as one of your investors will make you newsworthy, right? Will get you picked up by TechCrunch and other publications that will boost your presence in the market, right? On the other side, as let's say a company that's focused in deep tech, right? You would want to go with a VC that have people that again have worked in those industries, right? To be able to utilize their expertise, to be able to utilize their networks, to be able to have sparring sessions with them as to how your product or service needs to grow because they know the problems and challenges in that space because they've worked very closely in them. Right. So it is a symbiotic relationship where you're taking money from them, but you're also taking something else. And that depends on who at the top is leading this fund.
So that concludes our round of Q&As where I ask questions to you that I was too shy or too nervous to ask in front of a classroom full of 70 people at ESA. And thanks so much, Damien, for spending an hour with us on a Saturday to take me through what VC is and isn't. And I hope that whoever's been listening can kind of expect now what the tone and the voice of this podcast is going to be. We're going to be interviewing students, current students at ESA, also alumni who have been in VC or are going to go into it. and just to kind of demystify what it takes and what you don't absolutely need to get into the space.
No, you're welcome, Shruti. I mean, you definitely owe me a beer when I come back to Barcelona. But I just want to commend you and Prerna for setting this up as an initiative because I think it's important now for ESA and its students to start having more of a presence in the VC community, not just in Europe but globally, right? So it's time to kick some INSEAD and LBS butt in that regards because I'm sure we're going to have some fantastic investors coming out of it because we already have some fantastic investors that have come out of ESA, and that's why I'm also excited to work on the other side of the Fun Side podcast, where I'll be interviewing alongside with you more experienced investors who have gone on to create successful careers in this space, made some amazing investments, and grown to some senior position in some very well noted funds. So I'm looking forward to that. But thank you for bringing me on to the guest for this one.
Awesome. Thank you so much, not just for being here, but being here for the entire ride that the fund side is. And let's see where this goes.